I received this question from a foreign trader and SMB training student. After taking the winning trader and trading for a year, I'm now starting to be consistently profitable. However, my statistics show that I make more money trading VXX and SPY than trading stocks. Is trading futures more like trading the market? Should I maybe try futures instead of stocks? So huge congratulations on becoming a consistently profitable trader, a CPT, as I termed in One Good Trade. I love how this trader is measuring his trading stats. I just love that. Recently, when working with an overseas seven-figure trader, our first work, the first thing that we did together, was to get this trader tagging all of his trades, importing them into TraderView, and then measuring his results. Only from here could we spot specific areas for improvement and specific areas that he ought to eliminate from his trading. With an elevated VIX, you ought to focus on VXX, UVXY, and market products, particularly an elevated VIX with a news catalyst like a trade war with China. When VIX compresses, you may find your trading stats decline in VXX and SPY and in futures trading. Then trading stocks in play and trading equities will be optimal again. So you might think of it as having two distinct playbooks. You have a playbook for compressed and average volatility, trading stocks in play, and you might shy away from that and search for more market plays, market products when you have an elevated VIX and have a completely separate trading playbook. By the way, if you're looking to join a futures trading community, we run this affordable Slack room run by Merritt Black here. I hope that helps. We'll talk to you soon. Trade well.